We are going to take a look at the big bull perspective to give the other side of the story. Anybody that's been following here knows that I've been bearish. I've been bearish for a long time. Why get bullish now? I'm not necessarily. When you check out this analysis, I'll just tell you right now on this monthly time frame, that monthly 20 simple moving average is key to get over for the bulls. You see this range that we've seen play out? Well, we didn't really get rejected from it. We're right at that 20 simple moving average, and that matters entirely. So if we get over that, then that's why I'm doing this video, because we have to change our minds. That's what trading is all about. What I will be looking for is very simple. I'll go through it. This video is going to be pretty lengthy. I'll try to keep it under 20 minutes. And then we'll go to Tesla. After SPX, we'll go to Tesla towards the end of the video. So if you're more interested in that, you can zoom forward. But if you're new here, go down to that bottom right hand corner, hit that Option Center logo, and subscribe. Don't forget to like the video. Here we go. On the bullish time frame, monthly time frame, what we're going to be looking for in a bullish point of view. Okay, we see this as a 3-4. Nothing has changed there. But instead of ending this at a 5 here, we're going to have another 5-wave move push to end this in a wave 5, and it's going to be an ending diagonal. That's what our bullish perspective is. I'll show you the Elliott wave a little bit later and how I'm going to count this nice long big wave 1 in this bullish perspective will be the longest wave. We'll have a wave 3 that will be nice and bullish as well, pretty relentless, and then a real crunchy 4 and 5 to get that ending diagonal and in there, and then we'll have a much bigger push down. Okay, that's if. Remember, that's if we get over this 20 simple moving average on the monthly time frame, which is 6 points above us. Okay, and I don't mean we have to close above it. Okay, we're on a new candle. We're gonna get over it, and then and we'll keep an eye on it. I'll keep you updated, so don't forget to hit the notification button because we will constantly update any movement. I haven't been doing them that much lately because we've been waiting for things to happen. So what will happen on the indicators? I have these lines here, the bearish divergence. I suspect will continue to move up. It will create another bearish divergence. Now, on the MACD, that's the RSI. The MACD, we don't have any divergence. So this would be the top here. And then as that wave 3 goes much higher, we won't make a new high in the MACD. If we do make a new high in the MACD, that's insane. That then the move's not over yet. But we'll probably make a lower high in the MACD as we make higher highs on the on price action. Okay, so that's what we'll look for. But we'll need to get this bullish crossover. You know, it's curling. It's curling right now. It's really putting the pressure on bears. And bulls got to be sweating too. You know, that's all there is to it. That's what the market does. It makes uncertainty, and it makes you question yourself. So let's go down to the weekly time frame. I think we've said enough on that one. Okay, on the weekly perspective, I know I still have this drawn as a pennant. We should break above that trend line there. The MACD, it looks like it wants to go above this kind of triangle that we're doing. It's always a zone, you know, it's approximation. I could pull it up a little bit. I could say it already broke out, you know, so we have to be careful about that. It's just kind of, it's for your eyes to see whether we're getting bearish or bullish. It's just an optical indicator. Okay, so here's what happened. We have, again, we left this channel here on there, and so far it's considered a breakout, back test, and pushing up. Now you have that 100 moving average, the 100 simple moving average here at about 4,200. that's fine. There is a count that we'll have looking in bearish perspective, but we'll do that in the lower time frames to where that would be kind of our key area where we eke out a new high here, and then we continue to move down. There's a count for that, but by then, if we get to that point, we're going to be on the bullish side of things, and so we'll go ahead and kind of have the bull goggles on by that point, and so we'll be looking to get over it if we reach to that point. Okay, this is not a bearish candle on the weekly time frame. This tail candle, we pushed off of that 8 EMA on the weekly. Again, things are firming up. That's what we've been looking for. We have lower highs and lower lows to this point, so we have to be bearish until we start to make new highs. All right, we do have a gap up here as well on the weekly time frame. You can even see it there. That coincides with this 100 moving average. So again, we're pushing off that 8 EMA. That's our trend indicator. It seems to be very strong there on the weekly time frame, so we'll be keeping an eye on that. Let's move over to the daily. The daily time frame, we're going to spend just a little bit more time because we have a couple of boards to look on. But let's start off with trend is our friend. And I kind of highlighted this just a little bit different than usual, lower highs, lower lows. But now we're looking at this as in a perspective of a ascending triangle. And so, you know, as usual, let me back up just a little bit because I want to start off with what we've been looking at over and over on this default here. I've been looking at this as just a chop zone, okay? And we have resistance at the top of that zone. We have this chop zone. We'll dig in a little further. Chop zone here, chop zone. You see that resistance, chop zone. And that's all we're doing. We're in this chop zone. We had a fake break that was a bear trap, and we're at the near the top of that zone again. So this move could be 1, 2, 3, 4. It could be completing here anytime now. So that's what we're going to have to watch. And this kind of coincides, the top of this coincides with that 20 simple moving average. So something to look out. But as a bull, no matter how you count this, you want to get on top of that zone. You get on top of that zone, we consider that a breakout. And then we have to hold the zone. And like I said, by that point, we'll be looking at this as a bullish perspective if we get above this zone. This zone has been so powerful that if we get on top of it, and I'll go back to the trend is our friend, and that's how we're drawing our line here. We're right at it. And remember, it's a zone, okay? It's not this line itself, but we get on top of it, we want to use it as support, and that will be key to continuation. You see this triangle drawn out here. We should continue to move above the triangle momentum wise, cross back over here on the bullish side. And there may be, and this is why I have to put it in perspective. Let's give it a little more time frame on here. Let's go to 5 years. Okay, so we can see from this Corona crash how this wave kind of works. And you notice that we had a nice big move here, and then we consolidated as an ABC. In our opinion, it's ABC. That could be a move down and then a 1-2. Doesn't matter. We consolidated here. Nice big consolidation. And then there was relentless movement. A couple dips, relentless movement. Notice that the 50-day moving average acted as support the whole time. Most of the time it was trending on the 20 and the 8 when it was really bullish, and then it would check back to the 50, and that would be a buying opportunity. Every single time was a buying opportunity. Okay, that's something that we're going to have to look out for here. We get above the zone, and we're holding that 8 EMA, but the 50 is flat. So that 50 should start curling up, and there should be no reason to hold below that 50 if this is breaking out, and this is the scenario that we're looking at. To be a bull, we're going to start using these moving averages as they curl up. We're going to have to hold them as support. It will be the 20 that will be the important part until we get overbought and too much daily divergence starts happening. Then we'll check back to the 50, and then we'll move up, regain that 20 and 8 EMA, and start moving higher. And it should be pretty relentless. And why? And I'll show you. So you see this triangle. That's what I want to show on this board. Now, if we move over to our alternate, the plan should move something like this. Now, it should look just like, but a shorter version of this. You see how I have the turquoise arrows? This was the big move, and then a nice big consolidation. Well, we had our big move from way back in September, and then our consolidation, an ABC, a flat pattern. And now, after that, there was no real, all the dips were shallow. The dips were very shallow, so we have to look out for that. And then we had kind of a major one here. It seemed at the time pretty major, and like the market was done and it was going to crash, but it recovered. It recovered pretty quick after it came. Didn't even come down to the 100, but it recovered that 50. So that was pretty much the most damage that happened until you got to that wave 4. And then everybody thought it was crashing again. And same thing, recovered everything off of that 100-day moving average. And just, you could see the momentum waning by then. This ending diagonal as well here, and then finished at that point. Okay, so this can be counted a couple different ways. I do understand that. I like how it is right now, but I don't know if it matters to you. But that nice big wave 3 there could be a possibility, and then the end there. So, and this would be, in this perspective, this would be the wave 1 after that big old launch pad from the Corona crash. This would be wave 2 that and we're starting to get into wave 3. So wave 3 again, wave 3 can't be the shortest wave. But I suspect we're losing momentum in the higher time frames. And so I do suspect that wave 3 will be shorter than wave 1, but it will be longer, and in my opinion, much longer than wave 5. So wave 4 and 5 should be pretty miniature compared to the rest. Okay, so there's my other turquoise arrow pointing at this big consolidation, and now this should be pretty relentless to the upside. These moving averages should pretty much be the only thing that matters besides levels. Once we get over this 41, 70 to 80 area, we should use that as support. Okay, super important. Just like after this, it looks like 35, 50 kind of area. After price got above there, you saw the consolidation above it. Above that level, real tight consolidation, almost like a triangle, and then nothing but relentless to the upside. And you see the momentum indicators were just stuck in the middle, kind of waning. You kind of thought that it was bearish divergence, and sure enough, it built and built and built, and finally had dropped to the 0 line. But after the 0 line, it's up again. Never came back. See these? After that big consolidation underneath there, never came back underneath the 0 line until the larger wave 4. In my opinion, this is wave 3 and 4 because it's more dramatic. And then back above it right till the end, and then you see the change of character. So same here. This is what we're looking at. See how we dip under it, get back over, dip under it. Now we already had our big consolidation. We already had our ABC. Now, in the bullish perspective, we should not go back under that 0 line until we hit this wave 3 and 4. So this should be shallow, pretty relentless, nothing but bull action. Every time we get a dip, it should be bought. So that characteristic should, and it almost feels like that already, right? So that's why we have to look into this. Now, on a shorter kind of scale, I guess we'll go to the 65 just so we could start appearing, well, what's happening next week? Okay, what are we looking for? Well, we're right at resistance. We're right at that resistance zone. And also, if we zoom in a bit, we already have a 1, 2, 3, 4, 5 wave move. So there might be just, a few points to the upside for Monday. But I suspect if this is a 1, leading diagonal 1, 2, and then we are at our wave 3, pull back for 4, and then our wave 5 could be ended with a 5 wave move, and then we could be looking for a nice dip next week. But I don't know how deep that dip will be because of what we were talking about. Okay, we have these. We shouldn't go back under the 50. We shouldn't see it. If we do, it should be quick, and it should be bought quick. So you have your 50% and 60% retracement, but I just doubt that we'll get way down there. Now, if we get, if we do, trend is our friend, we just can't break underneath this ascending triangle. You start breaking underneath there, and that's a wrap. It's no longer this bullish scenario, okay? We should see a dip below wave 4, if that's what it is, wave 4, 5, and we're at the resistance. Then we break down for a wave 2, maybe at the 50 moving average, kind of collect ourselves, whatever. Whatever happens, we shouldn't see it break down underneath this trend line. You start breaking these levels, and it's bearish perspective solely. At the 65, we'll go to the hourly time frame just to show what we're looking at. This trend line, this was broken. It looks like we're just back testing, but this is impulsive. This move after that breakdown, just an impulsive move to the upside. So next week we have, we haven't hit. Let's do the expected move board here. If you notice, we've been in consolidation. We haven't really touched much of the top or bottom until this past week. And what we should start seeing is the touches of the top of the expected move or more. We should start seeing that over and over and over again, even if we start the week off with a dip. And notice this is a 5 wave move, like I said. So we could still look at this as a wave 1. Maybe already this is a wave 1 and then this is a wave 2. And then we get a 1, 2, and again, shallow, higher, higher. You can count it any way you want. This Elliott wave, nope, that's the bearish one, the alternate wave. Right now I see an ABC, but on this wave 1, maybe the wave 1 is in already. And we already had a, let's see, a very shallow, not even a 38 from the bottom, 38%. So it just doesn't seem likely, but a wave 2, maybe that's already in. It wouldn't be standard, it wouldn't be your typical, but it would kind of follow what was happening in the past, that we already had our consolidation, we're trying to break out, then we have a 1, 2, and we continue to move higher with shallow pullbacks, okay? I just want you to be aware, if that's the characteristic it's gonna be, then you're gonna see these pullbacks being super shallow. I know I keep repeating myself. Let's move over to, I think that should be it. Actually, really quick, just take a look at the VIX, just so we can get the perspective that I was talking about. I know it's the bearish perspective. You see that channel there? We're kind of getting underneath the channel. The VIX should continue to just die on us. Maybe it gets a bounce and then continue lower if this is a bullish scenario, okay? And that VIX should keep dropping and just kind of relentlessly getting underneath the levels of 15. And so, but we have a channel drawn here just to show that we're at the channel bottom and we could bounce from there, just optical. And let's move to Tesla, and we're just kind of gonna look at the Elliott wave count our alternate count for Tesla, just so we can, we'll wrap this up pretty quick. Let's go to alternate count. We have Tesla here with an A, B, C correction, and that would be a wave 4 on a higher time frame. But notice we pulled back. We have an ABC. I'll dig in there a little bit closer, and then so that would be a 1, 2, or if it's an ending diagonal, an A, B. But we'll call it a 1, 2 for now. And then we should see a 5-wave impulsive move up. And this should be a leader headed into this. And we should be at or near the lows at this point. And we should be getting a bullish crossover at this point. And Tesla should be one of the leaders helping us follow. Because the other, and Amazon as well, and some of the others, Microsoft, they can keep going higher. Apple, but they've already made their huge moves. And, they wouldn't be, in my opinion, like the driver of price action. They would just be continually to ride that elevator up. And here's in a lower time frame, the 65-minute. If you have a B, C correction for an A, and then a B, C correction for B, and then a 5, 2, 3, 4. I think I can't count like quite 5 waves in there, so I think we might have a little bit lower to go for a 5-wave move down to complete the C, and that would bring us right into the 618 retracement to where we have a 1-2 setup, and we should be a pretty relentless move from there as a wave 3. That should be the most impulsive move for Tesla, and then it could be completed because if you're in the Discord. You can check that out in the description. But if you're in the Discord, I was kind of pointing this out on Friday and saying Tesla's ready for at least a bounce because the wave A is equal to wave C right at the 155 area, and that's where we had our bounce. So it doesn't mean that we're taking off from here. We might have one more low to complete. But that was at least a spot to check out, and we could get one more low there, and that's all I want to show you. And this should kind of complement that scenario to where we're going to go much higher, and it's going to be a weak market. We're going to have some of these tech titans are going to have to lift the market throughout this move, and it's not going to seem rational because a lot of the indicators aren't gonna agree with it because it's an ending diagonal and momentum is waning and lots of stocks are weak, and so that's my perspective on the bullish side. We are not a bull. We're still short on a lot of our positions. Yeah, it was a bad week for us last week, but if we get over that 20 moving average on the monthly time frame and use that as support, we should start seeing some clues that the bull scenario, that the bear scenario is over and that the bull scenario is going to take over from here. Okay, we're at 23 minutes. Sorry for going over. Thanks for listening. Have a wonderful day, and we will talk to you soon.